Okay, so you've had a chance to have a look at that article. Something interesting in there, David? Something interesting in that article? Ollie? Matt? Yeah, it's one of the points that's coming out of there. Look, you've got your packs, and just keep that little chart in front of you at slide 11. Just keep that in front of you while we talk about this article. Let's just look at a couple of the extracts. Investors, towards the bottom there, investors are putting much less money into buyout funds, prompting private equity groups to raise smaller funds less frequently, so their fee income is falling. In response, many are cutting costs by trimming staff. So I think we were thinking that being in private equity looks like a good deal because of these fantastic bonus arrangements, but just look at what this article is saying here, and then it goes on to say some things about the impact of those cuts. Foreign ventures, new offices are being cut back, fees are also being cut. We've talked about pressure on fees recently. Headhunters say the shrinking of private equity is likely to trigger unprecedented turnover of people within the private equity industry. So there we go. So let's have a look at that. We've got that pack in front of us. What's going on here? What's going on here right now? Here we've got a cycle for a private equity firm. Private equity firm raises funds, invests that money, manages those businesses over in ideal times 3 to 5 years, sells those out for a profit. David, what's going on right now, though? What's impacting that cycle?
They can't raise the funds.
Can't raise the funds. Haven't got money to invest. Yeah, no assets to manage, no sales, no profits. Essentially, we've got very rocky times for the private equity industry. And I think it's the paper today actually has got reports about, I think I was talking to Matt about this, it's Permira here in the UK, Permira saying that to the British Venture Capital Association, at least the report was, that they're thinking about floating a lot of their businesses with the rise in the stock market. And you can understand why. That is a route out of the problem. If they can get some quick realizations from floating some of their businesses on the stock market, then they might be back in business. But otherwise, I think we are in very uncertain times for the private equity world generally. Any questions about what we see there? The slide's titled, How is Success Measured? And I think historically, it hasn't been probably about the size of your yacht or which car you drive. It's been about what size of funds you have under management. And some firms have played this game historically very, very well and have scaled up their funds under investment very, very quickly. And I think, I might be wrong, but I think Permira was one of the ones that's done very well. Raised funds, I can't remember the numbers exactly, it is on their website. They have increased over 5 years 10 times. Their funds under management has gone up by 10 times. And you can think about what that might have done for their ability, for their funds, you can think about what that increase in the size of their funds has done for their management fee, because I'm sure the percentage hasn't adjusted itself, so they're probably have done, I'm guessing, very well on the management fee. And of course, the other thing that I've got is the ability to participate in bigger and bigger deals and get more and more share of those carried interest arrangements. But what we're reading in the article is that for the private equity world in general, that whole cycle is at risk right now of grinding to a halt because they can't get the realizations. Any questions about what we've covered there? Okay, so I'm just going to sort of bring this session for a close, and then we'll move on to look at a real buyout and how that's structured and learn some lessons there. But just this introductory session to sort of bring it to a close. Matt, you had the answer for me right at the start. How do private equity firms make money for their investors? Buy low, sell high. Absolutely they do. David, what's one of the ways that private equity firms make money for themselves? By these carried interest bonus arrangements. Ollie, another way that they make money for themselves, the private equity firms? the arrangement fees, the monitoring fees, and the management fees. So all sorts of ways in which they can charge fees and pressure there from investors. How is success measured? Well, I would say historically, as I mentioned, it's been the size of funds under management, but one of the things that's threatening that model is the lack of realizations. Whose money is it? Ollie, I'm going to ask you, whose money is it? Pension funds, it's kind of yours, isn't it? It's kind of yours generally, it's yours. But pension funds, sovereign wealth funds, these are the types of people that invest in private equity. What did they do with it? Well, I think we covered that again at the start. Matt's got the idea. They're investing in businesses, hoping to sell out at a profit. So there we go.